Hello and welcome to today's quick video, which is called PPI and those surprise shifts that happened in its aftermath. You know that I have been predicting that it would definitely not be coming on the tame side of things, and it was very hot actually. So what are the consequences and how the situation was looking before I had not been publishing yesterday's video, even though I had it ready because care for the clients comes first and I wanted to be mapping out the daily shifts, not just the monthly indices, but what it means for real assets and so on, and the dollar, and things that turned out great. When it comes to the US dollar, such was the perspective before. It looked as if the dollar would be quite nicely continuing lower. However, given my expectations of a hot PPI, I called for a hit to interest rate sensitive place and the US dollar, and of course that means as well that yields would spike and rate cut expectations would be dialed back, all of which had happened. And here you go with the fabulous follow-up to the bullish dollar positioning of this pre-market session. There is none. There is none, and those gains are almost fully retraced, and all those major currency pair charts are looking approximately the same, not at all in dollar's favor, because the reaction is quite clear. What had been varied on Wednesday and what was shown immediately in the market reaction, it did repeat beyond equities yesterday after no matter how bad PPI surprise, and that is shaking off those inflation worries, focusing on the dual mandate, rate cut, give me that rate cut, give me an emergency rate cut, give me 50%, and Bassett was talking. That would have been truly smashing, wouldn't it? And markets are behaving as if that is coming right away, right now. Such was the situation before the PPI release. That situation that closed the preceding day, and we see a push to the short end, which gave way, was retraced. But what about this longevity as well? Following, and this is only situation at the close, only at the close. And for example, euro dollar had been just pushing higher in euro's favor ever since the market close of yesterday. What was in yesterday's unpublished video, I had been asking what had been the most important intraday development in stocks, and it was precisely the shape of the intraday structure, and that's what gave us it advanced clue when it comes to resilience to stock market decline and what would those individual sectors be doing. We got quite forceful recoveries in S&P 500 and Nasdaq. Nasdaq that I expected to benefit from intraday inflows, and those kind of gains have been delivered on the short side in Russell 2000, which was of course the lowest hanging fruit, the one celebrating the most for rate cuts and running in the anticipation, and it was turned back, but look Russell 2000 is trading per market and how seriously this is being taken. I have been as well covering for clients as always the sectoral breakdown and lessons that can be made from this picture. So how it changed from one day to another, pretty risk off, but what will be the pockets of strength and what to make of, for example, materials being on the receiving end together with industrials.